Welcome back to Money and Planet. Today, we're diving into one of the hottest topics in sustainable finance, green bonds. The big question we'll explore is simple. Can you really get rich while saving the planet? Or is this just another Wall Street gimmick dressed in green? Stay tuned, because we'll unpack how green bonds work, who issues them, the risks, the rewards, and whether they deserve a place in your portfolio. Section 1. What exactly are green bonds? Let's start with the basics. A green bond is just like a regular bond, but with one twist. The money raised is earmarked for environmentally friendly projects. Think renewable energy farms, clean transportation, reforestation, or sustainable water systems. Investors buy the bond, issuers get capital, and in return, promise to pay back with interest. In other words, you're lending money with the expectation that it finances something good for the planet. The World Bank issued the first official green bond in 2008. Since then, the market has exploded into hundreds of billions of dollars each year. Governments, corporations, and even cities are jumping in. Green bonds now make up one of the fastest growing corners of the global debt market. Section 2. Why do green bonds exist? Why not just issue a normal bond and spend the money on green projects anyway? The reason is accountability. Green bonds often come with strict frameworks. Issuers must specify exactly how the money will be used. Third parties sometimes verify the projects. This extra transparency attracts investors who want both financial returns and climate impact. In short, green bonds exist to give markets a tool for financing sustainability while keeping promises visible. Section 3. How do you make money with green bonds? At their core, they pay interest just like any bond. You lend money. The issuer pays you back with interest over time. The exact returns depend on the creditworthiness of the issuer and market conditions. For example, a government green bond might pay lower yields, but come with high safety. A corporate green bond could pay higher interest, but carry more risk. The returns are usually comparable to traditional bonds from the same issuer. That means you're not typically giving up income just because it's green. Instead, you're aligning your portfolio with your values without losing too much in performance. Section 4. The pros of green bonds. Let's break down the benefits. First, impact. Your money directly supports climate solutions like solar power or sustainable agriculture. Second, reputation. Many institutions want to show they are financing responsibly. That boosts demand, and demand can make bonds more attractive. Third, diversification. They add a sustainability-focused asset class to your portfolio. Fourth, policy support. Governments and regulators often favor green finance, which can add stability. And finally, long-term alignment. As the world transitions to net zero, green projects will only grow more critical. That could mean a steady pipeline of investment opportunities. Section 5. The cons of green bonds. Of course, it's not all sunshine and wind turbines. Let's look at the downsides. First, greenwashing. Not every bond labeled green truly makes a difference. Sometimes the projects would have happened anyway. Second, lower yields. In some cases, investors accept slightly lower returns in exchange for sustainability. Third, verification costs. Issuers must spend money to certify their projects. That can eat into efficiency. Fourth, limited supply. Even though the market is growing, it's still a fraction of global bonds. That limits choice and liquidity. Fifth, complexity. Understanding the frameworks and labels can be confusing for everyday investors. So yes, there are risks and trade-offs to consider. Section 6. Who issues green bonds? Now let's talk about the players. Sovereign governments are big issuers. For example, France, Germany, and China have issued multi-billion-dollar green bonds. The European Union has committed to using them heavily in climate transition financing. Development banks like the World Bank and Asian Development Bank also issue. On the corporate side, giants like Apple, Toyota, and Iberdrola have all sold green bonds. Even cities and municipalities issue them to finance subways, clean buses, or resilient infrastructure. The diversity of issuers makes the market broad, but quality varies. Section 7. The rise of green bond indices and ETFs. To make investing easier, financial firms have created green bond indices. These track performance across hundreds of securities worldwide. Think of them like the S&P 500, but for green debt. From these indices, ETFs have been launched, letting you buy shares in a basket of green bonds with a single trade. This makes access much easier for retail investors who don't want to analyze each bond individually. It also boosts liquidity and transparency in the market. Section 8. The risk and return profile. Let's get analytical. Do green bonds actually perform differently than regular ones? Studies show that overall, returns are roughly similar. Some research even finds a greenium. That means investors are willing to accept slightly lower yields for the environmental impact. This effect is usually small but real. Risk levels depend more on the issuer than the green label. If a government defaults, it defaults whether the bond is green or not. So, credit analysis still matters most. Bottom line, you're not likely to get rich quick, but you can earn steady, bond-like returns while supporting the planet. Section 9. Case studies. Let's look at a few examples. In 2019, the Dutch government issued a green bond worth 6 billion euros. It financed renewable energy and climate adaptation. Demand was so high the bond was oversubscribed. In the US, Apple issued multiple green bonds to fund renewable energy at its data centers. Investors received regular corporate bond yields, while Apple boosted its sustainability reputation. In emerging markets, the story is powerful too. For example, in India, green bonds have financed solar parks and sustainable rail transport. These case studies show that the model can work across different economies and sectors. Section 10. Can you get rich? Now to the central question. Can you really get rich saving the planet with green bonds? The honest answer, probably not in the get-rich-quick sense. Green bonds are bonds. They are designed for stability and fixed income, not explosive growth. You won't see stock-like returns. But here's the twist. Wealth isn't just about chasing the highest return. It's also about protecting your money, diversifying, and aligning with long-term global trends. Green bonds may not make you a billionaire, but they can help you build wealth steadily while reducing climate risk. In the long run, that's a different kind of richness. Section 11. Green bonds versus other ESG investments. How do green bonds compare to ESG stocks or funds? Stocks offer more growth, but also more volatility. ESG equity funds can outperform, but results vary widely. Green bonds, in contrast, deliver fixed income with a clear sustainability link. They are less about speculation and more about stability. Think of them as the anchor in your ESG portfolio. They won't soar, but they also won't collapse as easily. They complement other sustainable investments, rather than replacing them. Section 12. The future of green bonds. Where is this all heading? Experts predict trillions of dollars in new issuance over the next decade. Climate transition requires massive financing, and bonds are one of the most efficient tools. Governments are increasingly supportive, and investors are demanding greener options. We may also see innovation, like blue bonds for oceans, or transition bonds for industries moving from dirty to clean. The future looks like a bigger, more diverse, sustainable debt market. Green bonds are just the start of a broader shift in global finance. Conclusion. So, can you really get rich saving the planet with green bonds? Not overnight. But they offer something arguably better: the chance to earn steady returns while financing a livable future. They combine the safety of bonds with the responsibility of ESG. And as more capital flows into climate solutions, green bonds will remain a cornerstone of sustainable investing. If you're building a portfolio that reflects both your financial goals and your values, green bonds are worth a serious look. Because sometimes wealth isn't just measured in dollars. It's measured in the kind of planet we leave behind. Thanks for watching Money and Planet. Don't forget to like, subscribe, and share if you found this helpful. And join us next time as we explore more ways money and sustainability connect.